have a moving average. It's a 5 minutes exponential moving average. The color is red. The next indicator is also a moving average. It's a 13 exponential 13 period exponential moving average. Color is sky blue. The first one is 5 period exponential moving average. Color is red. And the third indicator on the main window is 200 period exponential moving average. Color is green. Also the last one on the main window, that's a 60 period Bollinger Bands. Shift is 3. Deviation is 0.02. Applied to weighted close. Color is black. And this is my main window. This is my main window. This is my main window, right? Now indicator window 1. This is my indicator window 1, and it has just average true range 14. Average true range 14 period, and that's all. So how does this strategy work? The strategy works with any time frame. Okay, works with any time frame. You can use it to get your trade entry, your stop loss, your take profit. So how does this strategy work? Now this gold chart, 5 minutes time frame. So the way this strategy works is when all the lines, all these moving averages, I'm talking about the 5 period, the 13 period, the Bollinger Bands, when all three are above the 200 period moving average, that is showing you price is in an uptrend. Price is in an uptrend when all is above the 200 period. This is the 200 period. All is above the 200 period. That shows price uptrend. On the 15 minutes time frame, also shows price is uptrend. All indicators above the 200 period. On the 30 minutes uptrend, all indicators above the 200 period. On the 1 hour uptrend, 4 hour uptrend, daily uptrend, all indicators above the 200. Weekly also uptrend, all indicators above the 200, and same thing for the monthly uptrend. So gold is an uptrend. On the 1 minute it's also an uptrend. So a way to use this strategy is if all the time frames are showing one direction of trend, which is uptrend, just focus on buying that currency pair or that commodity or that index. Okay, you can use the strategy for commodities, to trade commodities. You can use it to trade forex. You can use it to trade indices. So if all indicators above the green moving average, which is the 200 period moving average, you have an uptrend. Like we have an uptrend around here when all crossed above the 200 period at this particular point. Okay, so it's good for buy. If I had bought around here, okay, if I had bought gold around this point where all crossed, I could have made up to this point, I could have made 24, 34, that's 160 pips. Okay, and that's 160 pips of profit. Okay, but let's look at the downtrend scenario. Do we have any downtrend scenario for price of gold? downtrend. We are on the 5 minutes time frame. Okay, now this is a downtrend scenario. This is the green 200 period moving average, and this is the Bollinger Band. These are the moving averages, the 5 period and the 13 period moving averages. So all crossed below at this point. At this particular point, we have a crossing below. So it's a downtrend, and if the two moving averages are, I'm talking about the 5 period and the 13 period, that are between the 200 and the Bollinger Band, that's the range. Now if all crosses above, that's uptrend. Okay, if it crosses downwards within, that's a range. If all crosses downwards at this point, that's downtrend. So that's basically how to identify the trend. Now the first thing is to identify the trend. The second point is to know when to enter your trade. Now this is a 5 minutes time frame. You enter your trade when the candle, in an uptrend, when the candlestick is free from all moving averages. You have a free candlestick here. This particular candlestick is free from touching or lapping across any moving average. So it's like the candle opened a bit away from the 5 period and also closed away from the 5 period. So this is a possible entry point. So apart from in an uptrend, your entry point is for a bullish entry. You have when you have a free candlestick, a floating candlestick. Now the floating candlestick must not have some certain shapes, like let's say this is your floating green candlestick, for example. It must not have a candle wick, okay, that is as long as this, which shows a pin bar. Your candlestick must not have must not be like a, excuse me, just deleted the 5 period moving average in error. So what I'm saying is your free floating candlestick, okay, it must not have a long wick at the top. Okay, it must not have a long wick at the top, just like this. Okay, this is not a good entry candlestick. Okay, this is a good entry candlestick, floating above the 5 period moving average. This is also good because the wick above it is of the same size of the body, but as long as the wick is still within or almost the same size of the body, it's good to go to trade it as your entry candle. But if the wick is longer than the body, you might want to apply some caution in using that candlestick, the floating candlestick, as your entry point. Now if you want to enter your trade, you allow the candlestick to close, then you place your trade, your long trade or your buy trade. Now the stop loss measurement is going to be that very point on the 13 moving average that aligns with your entry candle. This is your entry candle, Now this is the point on the 13 moving average that aligns with the closing of the entry candle. I'm talking about the 3433 level. On this 13 moving average, it aligns with your floating candle, that is your entry candle. Now you are going to measure you're going to use the average true range point. We have 1.7231 as our average true range point for that particular entry candle. Okay, so you're going to deduct that from your 13 period moving average. So by the time you deduct 1.72 from 343, you have 341.342 thereabouts. You have to calculate it. You have 342 as your stop loss level. What am I saying? This is the 13 period moving average. The point of the 13 period moving average, which is around here, this is our entry candle, is floating. So the point on the 13 period moving average, subtract the average true range value 1.723 from that point, then you shift the result, and then you have your stop loss. This is your stop loss. That's 3432. That's 3433 minus 1.7. Let me put it in a text format. 3433 minus 1.72. That should give you 3 that's 1, and 1.71, that's 1. So that's 3433 3431.3. Just let's assume that's our result. These are our results. So we move the this is an assumption. You might need to use a calculator to get the value. So we'll move the stop loss to 3431.3. Okay, these are stop loss for entry on this floating candlestick. So let me repeat it. To get the stop loss, you subtract the average true range value. This is the average true range value. This average true range value, you subtract the value from the 13 period value that aligns. This is our average true range value that aligns with the floating candle. So this is a 13 period value subtracted by the average true range value that aligns with this particular candlestick, the floating candlestick, and the result is this is your stop loss. Now for the take profit, you measure the distance from the stop loss to the low of that candlestick. Let me repeat myself. For take profit, you measure the distance from your stop loss, okay, to the low of that candlestick. Now that measurement, you now use it from your entry and to the top. That will be your take profit. Your take profit for this particular example, the take profit should be around around where take profit will be 3441.72. okay, that's if on the 1 minute time frame, if we enter at 3436.97, our stop loss will be 3431.30, and the take profit will be just like what we saw, 3441.72. So it's a good strategy. You can try it with a demo account on any pair, any currency pair, or any commodity, or any index. It works the same. So that's a bullish scenario. Bearish scenario, where trade is in a bearish trend. Let's scroll back and find a bearish trend. Now you allow price to be in a bearish trend before you enter your sell trade. I'm trying to score, this is a bearish trend. No, this is not a bearish trend, because all the indicators must be below the 200, period. Now let's look for a bearish trend. Okay, this is a bearish trend. This is a good example of a bearish trend. Okay, now the all indicators cross below at this point, at this very point. We have all indicators crossing below the 200 period at this point. Now we wait for price to drop below all indicators, and then we look for a floating candle that floats downwards, that is not lapping. Okay, this is a floating candle, but in this scenario you have to be careful. Just like we have the bullish scenario, you have to be careful not to use this kind of candlestick as your entry candlestick, because price might drop. Same applies to bearish scenario. You really need to be careful not to use this type of candlestick, okay, pin bar, as your entry, because price might shoot up. But this is a floating candlestick, this is another floating candlestick. Okay, so if we want to use this, okay, let's say we want to, okay, this is another floating candlestick. Okay, floating in the sense that is free from the 5 period moving average. Okay, this is also free. The candle body is free, floating away from the 5 period. So if we want to use this as our entry, assuming this is our floating candlestick, so if we want to use that as our entry, the close will be our entry this time around. Close of the candlestick will be our entry, and then we will look for, we'll first of all identify the value of the 13 period that aligns with that floating candlestick, and that's 3347.37. Then we are going to add the value of the average true range that aligns with that candlestick. This is the average true range value at 6.5384. So if we are going to do the calculation, the calculation will be 3347.37 for the 13 period value, plus this time around, because we are trying to get the stop loss above 6.538. Okay, the answer will be that's 13. Okay, that's 13 point. So that will be 3353 point. That's 6, and that's 3. Okay, 54. You have to use calculator to do this because of time. 54.7 plus 6, that's 53. Okay, bad. 8.990. So that will be the answer, 3353.90. so you plot that 53.90, that should be around here as your value of stop loss. Okay, so this is where your stop loss will be. You can delete this, you can delete this. Okay, so if you sell around here, your stop loss will be here. Then you can now use the distance from the stop loss to the high this time around. For the buy trade, it was to the low, but this time around for the sell trade, it's to the high. Now from the entry area to that distance will give you your take profit. Now our take profit will be 3327.89. that will be our take profit. So this is also another example. It's floating, but it has a candle wick below, and price reacted to the candle wick. But if we are going to enter our trade here, let me delete all other lines. So if we are going to enter our trade here, okay, a sell trade here, we need to calculate the stop loss, and that should align with 13 period. Okay, this is where it aligns with the 13 period. Then we need to add the average true range. The average true range for that particular candlestick, floating candlestick, is at 7.24. So 7.24 plus 339, let's assume 3346. Let's just assume 3346 is the calculation. So our stop loss will be here. Then to get the take profit, that will be distance from this particular stop loss area up to the high. Don't forget, to the high for short trades of that signal candlestick. Now if we have that, then our take profit will be, excuse me, beg your pardon, if we have that, our take, where is the case? Okay, where that our take profit, sorry, excuse me, looking for where the signal is. Okay, this is where it is. Where that from the entry downwards, our take profit will be around that point. Okay, this will be our take profit, 3298. Although price went up, but it didn't get to the stop loss area. Rather, price started dipping and it came to the take profit. So it's a good strategy. It has a high chances of success, like 80% chances of success. But you know, all strategies are not perfect. There is no perfect 100% strategy that wins 100% all the time. Okay, but if you can get a strategy that wins at least 60% of the time, it's a good strategy. But this, I assure you, is around 80% win rate. So you can try it on any time frame. It works the same. So that's that for today's strategy. Don't forget to subscribe to the channel, smash the like button, share the video to your friends and loved ones. And you can visit our website www.beanfxtrader.com to learn more on how to trade. Till I come your way next time, it's bye for now.